Hey guys, how's it going? Jay here. This is smarthelping.com. I've got a new template, hopefully a bunch of new ones coming out here in the next few weeks. This is for a convertible bond or new equity round cap table analysis. It's going to show you what happens to existing shareholders when you raise money either in a new equity round or with if you just raise money in a convertible note and that converts at some point in the future or during this equity round, and what happens with current ownership structures and all of that. We've got cap table pre and post as well. Um, I try to make it as dynamic as possible, so this is going to fit a lot of different scenarios. You could enter your details on each group of stakeholders on the cap table pre. That's going to come over here and populate the percentage ownerships. Um, Now you can see we start with, I just try to put it in sections so it's kind of easier to digest. Note we do have some sensitivity tables and some charts here. But let's just start at the top. So you've got fully diluted share count, 8 million shares. Now of that 8 million that exists, and this is before the convertible note is issued, this is before the next equity raise. So we've got 8 million shares. Here's the ownership of the founders, employees, other investors, option pools, other warrant securities, and new equity and convertible note will be what's added in the future. And note you don't have to both have new equity and a convertible note. You could have one or the other. If you want to zero out the convertible note, you just zero out the principal raised here, and it'll just show you what happens if you raise more money in an equity round. Or if you want to zero out the equity round, you zero this out, investment amount, and then the convertible note will convert based on the pre-money valuation here. So this is basically the future valuation that's going to be used as the basis for either one or both the convertible note or the equity raise. So anyway, here's your structure right now, which is going to be based on cap table pre, which you could put in the percentages, who owns what, and you're going to account for every single share that's existing, or also unissued. Like if you have option pools, you want to account for the potentially future amounts you might grant here. So everything fully diluted shares needs to be accounted for there. And we see shares pre, shares post. Obviously, shares post is the same, except for we're adding, based on the terms below, new equity and a convertible note possibly. So you got your totals down here. This is the post money ownership. So here's what happens based on these events. So obviously we're diluting ownership by adding shares through either of these methods. And here's the change in each group. I also did the change. You'll see the change in ownership on the cap detail post. So shares are the same, but the percentage ownership is different here. You can see F1 founder went from 20% down to 9.8 in this case. Here's the new fully diluted share count. The pre percentages, the new percentages is new is the new equity and convertible bond. These two, which you don't see on the pre. So let's talk about how this actually. So what factors are going to determine how much dilution happens? Well, the convertible note terms, how much you actually want to raise through this note, and what the convertible note does. And I try to put notes here on everything, but you're going to raise a certain amount. Let's say it's $5 million. It has an interest rate. It has a conversion discount. It has a valuation cap. Now, what the valuation cap means is when this goes to convert, it won't convert at a higher cap than this. And here's why. If your pre-money valuation cap here in the next round or whenever you do this for the convertible note is too high, they're worried. The convertible note's like, well, we're going to be get a super low share amount for how much we paid. So usually there's some cap on how much what the valuation is when they calculate how many shares they're going to get for this amount. You could determine the months held, and that's going to define, you're going to, usually this note will accrue interest, add to the principal, and then this 5 million is going to be used as the basis for how many shares this convertible note gets. So let's say this happens, and now we're going to raise some more money. So we have a pre-money valuation. We're saying we're going to raise it. Let's say, and let's just say it's under the cap. Let's say we raise it at 8 million valuation. Oh, not 80. 8 million. We raised another 4 million. So we've raised 5 million here, another 4 here. Post-money valuation is just adding the pre-money and the investment amount together. Next round share price. So here we're just taking the valuation against the fully diluted share count before we raise. So this is what it cost the new equity investors, so like this 4 million here. And you can see their share count for new equity investors is just going to be based on that against the amount, the investment amount. But with the bond, they now have two options, or well, they have two calculations, and you got to pick the lower of the two. So you've got a discount price. This discount price is based on the discount rate here, and you can see we're discounting this share price again based on the pre-money valuation by this discount amount, and then they could either convert at that price or the cap-based price, which cap-based price is just taking the valuation cap that was defined against the fully diluted shares before the raise. So whichever is lower they get, obviously the lower price per share means they get more shares. So you pick the lower one, in this case is 80 cents. So now the new note holders that gave $5 million at these terms, they're going to get 6.4 million shares. In this case, that's quite a big dilution. We're looking at almost 56% here of the existing ownership. They're getting diluted. The convertible note's going to get 34.8%, and the new equity is going to get 21%. So all these calculations are automated. All you have to do is kind of update these cells in yellow per your situation, and everything else auto-calculates. At the bottom here, we're just showing the total shares added, the new final share count, and the existing holder dilution. And like I said, the cap table post is going to show you each entity what is going on after either the convertible note has converted or the new equity is raised, or both, and what the cap table looks like afterwards. Also, I did a couple sensitivity tables. I try to get the most important variables. So first one is dilution of existing shares based on different convertible note amounts raised, as well as different pre-money valuations. So that we're isolating this variable and this variable in this case to get this final dilution number. So you can see if we raise at a lower valuation here, we're going to get diluted more because they're going to get a ton of shares. If we raise at a higher valuation, the existing holders, our dilution is less. And again, that's why there's this valuation cap for convertible note. You can see the dynamics happening here. And I was going to sensitize the conversion discount, but it really didn't make a huge difference. Same with the interest rate. So these are the most important variables I could pick out. Then secondly, if you wanted to just look at the investment amount raised, so this variable here for the new equity round, you can see how new or dilution of existing shares happen based on a certain investment amount raised and different pre-money valuations. Now here, the pre-money valuation is going to impact, well, you can see the shares, the share price. So if this went down, let's say it was 5 million, you can see now the price per share for the conversion, the lower of these two, this is even lower. If you were to raise it higher, 25 million, okay, now the convertible note is going to convert at the valuation cap here. And what's nice about these sensitivity tables is it runs through all the logic and tells you what is going to happen based on these different variables. So that's kind of nice, especially in this where you've got a lot of different factors. I thought the sensitivity tables made a whole lot of sense. And you, instead of having to go here and continue to adjust these one by one and see like what the dilution factor is, you can just see it here. Now, obviously, you will have to adjust these numbers if you want to see in detail what the dilution is of each in the new ownership structure is of each investor and stakeholder. Then the chart here, we just show ownership changes post conversion, post money. So, founders went from 56 to 33%. Employees had 4%. Now they have 2.3. Other investors 20 to 11. So this just shows each of the stakeholder groups and how they were diluted or adjusted based on the new round raise or convertible debt. Obviously, new equity and convertible note are just going up because those are what they're adding, and then the net of that is how much goes down off of these. Yeah, that's about it. You can download the template at smarthelping.com. Links in the description. I will include this. Let's see if we go over to smarthelping.com. I was thinking about a good place to put it. So there's a couple. So obviously it's going to be included in the Super Smart bundle, which is, I've got hundreds of financial model templates in Excel that I've built over the years. So you'll be able to buy it in that, but I'll also put it in a couple smaller bundles. I'll put it in the accounting tools and trackers. I think that's a good spot to have it, probably in the other helpful tools section. I'm going to put it in the data tables bundle because obviously we went over those sensitivity tables and all these models have sensitivity tables. So we'll put it in that. And I was actually thinking about adding a new bundle for startup tools in Excel. And I don't have it right now. I mean, technically, most of the models I do are for startups, but they're usually like full financial projections based on bottom-up assumptions for just different businesses. Um, so, you know, 90% of the things here on the site can be used for startups. Um, but I don't really have a specific thing of startup tools per se that's like a cap table or when you're raising money between rounds, you're going to want to use, this tool that we just went over today to understand the dilution effect through time. So I might do a new bundle, start of a bundle, which is just going to have one template for now, and we'll add to it of just like specific startup tools. Uh, so we'll see there. Also, you can hire me. I can build whatever you want related to financial modeling in Excel or Google Sheets. Rate is $275 an hour, pay as you go. You can just email me about the details and we'll go from there. Um, I track time in real time, and you'll have a tracker, a Google Sheet, private Google Sheet specific to your email that you can always see like work log details. Um, and I encourage you to check out, on average, here's how much I've been billing clients for the year, the average amount the client has paid, and just some different stats so you can kind of see what is likely to happen just on average for the average client that's come through Smart Helping. Okay, well, that's all I got for you today. Hopefully we build some more templates. I'm really want to focus on a couple more before I go off for February to get into some warmer weather. So we're going to try and really pump out some templates this end of this week and into next week. Alrighty, like and subscribe. We'll see you on the next one.